Hi, my name is John Su with Naked Real Estate, the barrier-free experience. Today we have mortgage specialist Kaleem Khan with Dominion Lending Braco, and today's topic is the lowest interest rate always the best? And what I've found is, for a small payment or whatever, it is the best, right? Because at the end of the day, the smaller your payment, or the lower your interest rate, the faster you pay off your mortgage, and the smaller your payment. But what I've also realized were some undiscovered issues like massive payment penalties. So in my opinion, lowest interest rate is only the best when you want the lowest payment or to pay off your mortgage faster. And Kaleem's going to share with us some unknown stuff about mortgages on why he believes that lowest interest rate is not the best, always. Kaleem?
Yeah, absolutely. So when it comes to mortgages, of course, or any sort of loan, the best thing you can do is have the lowest rate. I think that's a given all the way. But the type of mortgage with the lowest rate is something that we definitely need to look at. So what I'm trying to say here is, what are your goals? So it all comes down to what your goals and what your aspirations are, for example, in getting a mortgage. Are you going to be in this place for the next 5 years, 10 years, 2 years? It all depends on your goals.
Can you give me an example of where the lowest mortgage or the lowest interest rate was detrimental?
Absolutely.
Client, like an example of past client?
Absolutely. Now, just to give you a little background on something like that, there are banks and there's institutions that will go out and offer you sometimes what's called a no-frills mortgage, and that's just one of the names for it. Or another name is just, could be anything that just says, we're going to give you the lowest rate, and it's going to come with a 5-year term, for example. And these things have happened before, where you get a 5-year term at a lower rate than what everybody else has been offering.
How much though?
Let's just,
honestly, 1%.
It's probably about 0.1 to 0.2, maybe.
0.1, 0.2. How much is that on say a $400,000 mortgage?
On a $400,000, perhaps close to $100.
$100 a month.
Yeah. So now you're looking at maybe you're lower your cost by about $1,200, maybe a year.
Okay.
So you're lowering your cost approximately by that much. But what tends to happen is those are very locked in mortgages. So what that means is, for example, they may not allow you to take that mortgage to your next property. So may not have portability option with that particular mortgage.
So you can't port the mortgage is what the mortgage book is called.
Yeah, so in most cases you'll be able to port the mortgage no matter what. Now, another issue could be that if you were to sell your house before the term is over, then your penalty goes up quite a bit. Now, how does it go up quite a bit? It's because initially when they offered that lower rate to you, they had gone down to investment floor and purchased a bond at a lower rate and to offer you that low mortgage rate. So when they did that, now they're going to break out of that particular contract, as you are, then they need to pay back that initial investment that they put into it. So then what tends to happen is they'll charge you that as a penalty. And those can be quite high.
Give me an example of an average penalty. So let's not scare the shit out of people, but I remember one time real estate market was booming, bought some rental properties where the lending was a lot easier. Year before the mortgage was to terminate, I got a letter saying they're not going to renew my mortgage, find another lender. So pretty much, I had to sell the property. So I said, oh, okay, sure, I'll sell the property. I got some money in there. I found out the payment penalty on about $300,000 for breaking it in this 5th year, beginning 1 year early, was $13,000.
I've seen penalties up to $30,000 to $40,000, but of course those are for larger mortgages.
Yeah.
Also,
$13,000 on $300,000 mortgage. That's a rip off. That's a lot.
Absolutely. There's
for 1 year. Come on, man. That's armed robbery.
It can be
garbage lender. I forgot their name.
So the reason again is because those are something that was an inter-rate differential that had nothing to do with the rate that they particularly offered at that time, which may have been the lowest or perhaps was somewhere in the middle. But again, it just comes down to what your personal goals are. Because when it comes to like an interest rate differential, that is something a bank, and I think everybody should just definitely have a discussion as to what that may look like in the future. Because you got to remember, banks are going out just like we are. They're buying money, which is a bond. They're buying it at a specific price, and just like yourself, you don't like to lose money, nor do they. They're a business, and that's what they're not in it to lose
themselves.
Money. Yeah, exactly. So
I guess you can't blame them, but still a bitch, right? Better to be smart up front, and then
absolutely. So whenever there's the lowest rate, always be aware of like what does it come with. The other thing that could happen
What are
with
some
those
things
low
that
rates,
it typically comes with?
it could be prepayment. Now, how much prepayment would you like to do? Prepayment just means paying extra towards your principal. You do it two different ways. You
Do
put
they
it-
limit that, or what do they do?
Yeah, they do. They just limit it. Like some banks will, from 20, they'll limit that to maybe 5%.
5%.
5 to 10%, they'll limit that down. Now, in most cases, a lot of people don't use those anyways. But
Yeah.
just be aware of, are you allowed to break that term within the first 5 years, or that within that term? Like, can you? If you do, what are the reprimands and what would have repercussions? How much do you have to pay out? So be aware of that. But definitely know what that mortgage looks like. If you're going to be in place for the next 5 years, you know for sure you're never going to move out, no matter what happens. Well, in a case like that, maybe that lowest rate with the most restrictive mortgage may be the best one you can go with.
Yeah, but life always happens. You always think, yeah, nothing can happen for 5 years, then you lose your job, or you have another baby, or whatever it may be. Life happens, and can you really say, that you're going to be there for sure for 5 years? But I think it's always good to do your homework to find out what are you actually getting, because there's always a cost, to getting the lowest interest rate. You never get anything for free.
Absolutely, absolutely.
Okay, awesome. Thanks, Khalid.